What's up, everybody? Good morning. How's the music sound versus the audio from my voice? Getting all the final little balancing setup here. Yay, what's up, Lori? It's a bit elevated. The music is? Okay. Let's try that. Okay. Check, check, check. That's just turning my system sound down. Oh, I guess what's that? That was not controlling it. All right. Okay, we'll do it like that. What's up, guys? Good morning. All right. Trying to set my settings here really quick. System. Oh, I remember. What am I supposed to do? All right, I'll have to play this tomorrow. Good morning, everybody. Checking on my microphone. Microphone sounds pretty good. Okay. Check. Check. Oh yeah, I need to go set my settings. But that's okay. We'll do that tomorrow. See if that sounds a little slightly different. And there I should be able to control my audio. It's a very serious sounding track that's on this copyright free thing. Cool. All right. How are y'all doing today? Weeks on point, good. So last to the platform is much responsive and quick to load. Thank you guys, appreciate that. We spent a lot of time optimization, like I said, always building, always making something, always 10 steps ahead. Hear what you guys say and what y'all want to see and what y'all want to make, and we go out there and so your wish list is very helpful. So we are getting, I can actually jump into the Wolf podcast today. 1 second. Well, a lot of cool things are happening this week, especially tomorrow. Hold on. Okay, let's get our... Okay, get my dynamics up here real quick. Oh, I still need to import the Doomsdays again. My voice sounds like what? Your voice sounds broke. Hey, can somebody point me in the Discord to the Doomsday bands? I'm in a hurry. Where did y'all put that? The Thinkorswim one. Is that in the members room? Members lounge. In chats. Is it in the members lounge, guys? Let's gonna grab it real quick. Kyle, there it is. Okay. Oh, there it is. I found it. Thanks. Import. Okay, good. Okay, there it is. Oh, there it is. Okay. Let me get the green lines in there really quick. Good morning, everybody. Hit that like button while you're here. Feel free to say hello in chat. Let me get these risk and rules up in here. NQ 109. Wait, that's not the right one. What do they call it? Phone is dead. What a morning. Okay, hold on 1 second. Good morning, everybody. All right, let me get Rocket Scooter front and center here. The world's close this down quick. Okay, opening everything up. Let me log in here to this new version. Classic app and Scooter. Good morning, guys. Hit that like button. Let's go. All right. I got it. Every time since I built my new computer, every time I sit down, I realize there's one tiny little task I haven't done. Let me get my phone charger really quick and I'll be right back. If somebody can do me a favor, point me to that the most up-to-date Doomsday. If y'all can drop the Thinkorswim link in a DM to me, send that to me because I need to add it to my charts real quick. I don't have time to go digging through Discord for it. Appreciate you guys. If I can do that. Welcome to the stream. Let's get ready to start talking. Hello. Random spam chatter. This is your lawyer speaking. You probably should stop talking right now. You guys ready to kick it off? Market starts open in 3 minutes. Boy, I'm having an awesome time with this new computer. If you guys have seen the pictures, I'm making a really awesome set of reels and videos of the computer build. It's going to be really cool once we get everything started. So we'll see things going pretty quickly. All right, guys, hit that like button right here really quick. Let's get started. Should somebody message me that? Oh, here we go. Thank you. Love you, Nick, so much. All right. One moment while I load up some DD here. I don't know what's going on, but okay, come on, get some. Oh, because I have this. That would be why. Okay, hang tight really quick, guys. Set up, open shared item. There we go. Preview, import. And we are good. All right. All right, guys, what's going on? Now, this is really weird. My camera, sometimes it like glitches and then it, see, I'm gonna do this one more time and try this. For some reason, I need to install the drivers on my computer. Just see that little glitchy weirdness of my old camera. Yeah, so we're gonna go ahead and forego camera again today. Be a little play that. We had to put our kitty cat down on Friday, so we had kind of like a crummy weekend. If y'all know my girlfriend, feel free to, if y'all all follow her on Instagram or whatever, feel free to send her some love. She was really, really sad. So I've been kind of playing catch up this morning. Okay, so we have 29.5. Let me get the risk intervals in really quick. Market's about to open in just a second. Get the green lines. So let's talk about what we think is going to happen this week, right? We are now walking into the final steps of 2022, right? Jump back into this podcast really quick. Usually Mondays I'm double booked. I'm on 2 podcasts at once sometimes. This quote unquote stream and a podcast. So it's 2 shows at once. So let me hop on in there again. Give me a moment. Okay, let's get forward. Some markets rational today. Let me get the Russell numbers into the Doomsday Band. 32 on Russell. We're going to be trying something different tomorrow. I'll make the announcement tonight in chat. It's really cool. We're going to be doing something different on Tuesdays, starting tomorrow. Okay, let's get the market open front and center. There we go. That's good. That's good. That's good. Feel free to make sure you guys go to rocketscooter.com, grab that free trial. You guys get started with us today. Let's see if this is still working. It's still kind of glitchy and weird. All right, let's go ahead and delete that. Let's add the camera back. There we go. Ooh, you can see how beautiful I look with my green screen. All right, let's go ahead and put that there, cut that there, and ooh, that's bright. Yeah, the look at that. This is going real quick. I haven't put any effort into this yet. That's better. If my face is sparkling, yes, gotta deal with it for a day. Ooh, that light is bright. Let me turn this down a little bit. Okay, market's open. Let's get ready to get started. Ooh, okay. Hold on. Wait. Ooh. Yeah. Oh, it's got auto exposure on. That's why. Good morning, guys. All right. Let's go. Rational, rational, rational. Market's looking pretty good today. Let's pull up Rocket Scooter front and center. Let's take a look. Remember not to pick my nose. It's been a month without a camera. So I always have to remember not to do embarrassing things on the stream. Let's take a look. Man, do you guys like... Okay, so in chat, everybody, tell me, do you like the new rocket skin improvements? We spent a whole month optimizing and working on some things alongside our normal projects. It's kind of slowed down development of the bigger things we're releasing, but the optimization, worth it? Y'all like it? Faster? See, like when I do that, little sparklies behind me here. You guys love it? Feels better? Love you guys. That's what I'm talking about. This is what I am happy to hear. Okay, so let's go. Let's take a look at what's going on here. Super noticeable. Very cool. Very cool. Okay, let's take a look at this today. All right, just getting situated for the first week back. Make sure you guys hit the like button on the way in first and foremost. Let me see. Why do I feel like I'm... Oh, let me scoot over this way. It's super cold today. Is it cold where you guys live? It's really cold where I live today. Yeah. Let's double check. Let me check out things really quick. Let me check up here. All right, we're looking at this really quick. See how my camera starts to get slow sometime in the middle of this. I haven't actually set up the second computer yet, so I have the dual streaming rig. See, all right, let's go ahead and just turn this off. It's kind of spooking me out here. So I have like two cameras, right? Or sorry, two computers in one box. One of them's supposed to control the streaming, one of them's supposed to control the trading. I haven't even set up the second computer yet. I mean, it's working, it's turned on, everything, but I haven't set it up to capture the stream and do all that. That's what I'm working on this week. I'm gonna have 3 cameras in this studio. All right, we are working on seeing what's going on. Oh, so there's no data coming through yet. Let me double check what's going on here. Okay, so let's get back and we'll monitor before we get too deep into what's going on with our data. We're gonna look at that. Let's talk about first and foremost the first thing you have. Our team is looking into it immediately. Thank you guys for jumping onto that. Like I said, every day we learn something new about whatever. We're pioneering a big, brand new method and being the first industry to share something like this. We have experimental data sets, data feeds, and we're kind of pushing our data providers to the limits by how much data we do pull. So sometimes we get little hiccups, and little by little we optimize, and they optimize, and it gets better and better. So looking right now, just with the data we do have, market is coming through essentially nowhere scary in the middle of the risk interval band. It's like flat in the overnight. VIX is in decay. We start a new VIX month. Tomorrow. So after tomorrow, you're going to see the market really rear its ugly head today. I mean, tomorrow, if there's anything bad coming out of this. Now I'm going to talk about a thesis that we started off by saying, if you guys remember, let's look at this really quick here. I'm going to show you guys something. Hold up on Twitter here really quick. On the podcast, I'm on Neely speaking. I love Neely. She's so smart. The post that I made right here, it's instantly tweeted. We called a 2-month bottom way back in whatever the first one was. I think it was July through August, and then we said the market's going to pivot down. And then after that, another thing we said, we're calling for a bottom for 2022 and a rally through mid-January, genuine buying. And there's a thesis that I presented, and I wrote this like, I don't know, 20-page thing, I feel like, on Reddit. It was this huge justification of the market bottoming for the year. And but allow me to start over. Remember, this is not investment advice or trading advice. I'm just some rando dude from the internet here to teach you guys trading and how market works. So we're going to talk about some things. Let me pull this on the screen really quick here. Okay, so what we're seeing is a problem. Okay, there's a problem right now. And this thesis now has been invalidated as of 2 weeks ago, and we talked about that as well. The rally, quote unquote, genuine buying is still there, but the market makers have now somehow very rapidly redistributed the positions that we were hoping they wouldn't be able to do. And the commitment of traders, the very quickly reviewing this, will show the detail what the fear is today. So when this red line, if you the commitment of traders is one of the best things you can do. And while you guys may be learning things in the market, hold on one second.
Is the home of winter, so take a seat in a wild, rugged landscape and feel right at home in the true north. Warm your spirits with our local charm. Discover the cuisine in Quebec City. Glide down the powdery slopes of Whistler, or relax in the healing waters of Banff to find out why Canada is the home of winter.
At Chevy, the holidays mean going places and having fun with friends and family. Visit your local Chevy dealer, and when you find your red tag, you find your deal. Find new moments, find new roads. Chevrolet.
Feeling
All right, we're back. All right, let's go. Oh, data's back. All right, guys, let's go. Sorry. Was chit-chatting. All right, cool. Oh, here we go. What did we say here? All right, here we go. I guess they just had like a server fart this morning. Okay. All right, so here we go. We are now rolling into a new S&P month. In bull markets, you tend to open above monthly hedge pressure. Okay, so this is the start. This is the first Monday after we had expiration. Monthly hedge pressure is going to be the net positive gamma of all institutional positions that hold for a month at a time. So this is a decent sign for the month being bullish, but still, right? This is monthly hedge pressure starts very low at the start of the month, which is the fourth Monday of the month, which is today. So when you have this kind of spread here, that's normal in a bull market. You usually have selling into monthly expiration, and then you have the gamma still positive for the month. So as the month trades by, this is actually not a terrible sign. Now back to the thesis. I know I was on that podcast this morning. I was chit-chatting about it. This is all I wanted to say. When the market makers are positive, the markets never crash. Not once in the history of this report. This is positional risk in S&P futures, something I want you guys to all know about. This is a very, very cool trick. I know y'all may be learning trading out there. A lot of people like to draw shapes and colors on their screen. We like to use actual data that adults use. So, you know, put your magic markers up and let's look at something substantial. This is the positional net long, net short, oscillating around zero of market maker positions in the S&P futures. Okay, this is mirroring the risk of the ET and ETF network. You're going to see a lot of stuff in here. When this red line is positive, above zero, not once has the market crashed. Doesn't mean it can't be bearish in that moment. And this time that it was zero, you had a double top before the big recession. It's just saying that when the banks are holding everything we've sold to them, market makers are holding the bag, they don't let the market crash while they're the ones that are long. And this is something that's always been a thing. And it's very obvious when you explain it that way. And so while they were long back here, I said the market's bottomed for the year, and it has. It's a very easy mechanic to know. Now, you guys may say, man, I learned something super cool right now. Against all your friends that are traders and all your gurus that are traders, you now know something that 1% of 1% of 1% know. Write this down, because in 10 years, you'll see it again. It's not something that happens every year. You know, in the last 8 years, you could have this discussion 3 times. So just keep this in mind. There are tons of tricks that I have up my sleeve that I like to share with people. And in the environment that we're in, you guys can use them again. But just remember, this one mechanic right here, you might, oh man, I learned something cool. In 5 years, 10 years, 20 years, whatever, when you see this again, you're going to remember that mechanic, okay? Everybody got it? Big old yes in chat. We cool? So this effect that gives the market, dealers are long, and now we have real humans buying. Market became very liquid at this point in time. You had the net asset manager, institutional long buying the market. You had the institutional short, the net contrarian position of Wall Street shorting the market. Buyers and sellers finding each other. We call that, in the world of Wall Street, liquidity. So when markets are liquid markets do not crash, and liquid markets doubly do not crash when the dealers are the ones in the net long position. So they have to kind of redistribute the junk we've been selling to them all year, give it back to us. They either need to sell to buyers or sell to shorts covering. And as you see, the shorts are not covering, they're becoming more short. We do have a natural wave of buyers instead of short squeezing until the end of the year. So let's think about what that means, right? Why are people longing until the end of the year? Well, they're just putting these stocks in their books just to say that they had them, right? Or the market's dipped enough that there's a nice appetite for Wall Street to start absorbing some of this to get into a decent position. But you're not seeing the shorts scared of their position right now. So dealers were able to get out of their position by selling right? For finding buyers. You lower the price low enough, you found buyers and they got in. That's basically it. So now that this number is 0 or negative, the market as of way back here, right, 3 weeks ago, right here, we started talking about that being the end of the bull thesis for the year, right? And the market's been shaky ever since. Now, we got the expected 50 bips that we predicted we would get from the Fed, right? But the market had no response. We had 2 great data points, right, come through last week. We had inflation coming down, and FOMC has less of a rate hike, 50 instead of 75. We predicted both of those, but we also said that the market was not going to be hyper bullish off of that. And I made a tweet about that last week. And again, talking about how the market moves, the mechanics of the market moves is what Rocket Scooter is all about. You know, designed by engineers. We are a team of engineers that put together new indicators that find liquidity, not shape of price, not averages crossing over, not weird shaped hexagons and triangles on your screen, and, you know, lines that just cover up every piece of data. All we look for is liquidity. If there's buyers and sellers, markets don't crash. If there's illiquid markets, they move one way or the other. And so we try to figure out how that works, and we look for high volume pivots, and our indicators predict things like that. So now going forward, you can see that there is a very, very, very illiquid market at this point in time. You have shorts shorting harder, longs selling, and dealers are negative. When these 2 lines are parallel, the market's illiquid, and when the dealers are not holding the bag and market's illiquid, be very careful about markets turning around and starting to collapse under that. Unless there is some reason for people to buy. Now, what are the reasons, right? Inflation comes down. Well, we didn't see a big rocket off of that catalyst, did we? No. Did we see unemployment numbers go up? Yes. And so that's also a good sign that companies are trimming fat. It's all looking at that one thing I said, that next quarter, you're just going to start seeing Wall Street have less confidence in the profit or profitability of companies. And the S&P is very, 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 very much reflecting this. Margins are down. Remember, when you lay people off, especially your inefficient labor, your bottom 5%, 10% of the workforce, where do they go? They go to look for a job. And in the era of COVID, right, when people didn't work, anybody that wanted a job could go get any job they want at any price they want, right? They can charge whatever, and labor goes up, and then inflation goes up. That's where it started. Shortages of raw materials, those prices go up. Shortage of workers, labor goes up, right? So inflation built its way in, but now as people are getting laid off, right, you're saturating the labor pool with unemployed people. They can't be so picky and ask for big raises or big wages for their new jobs. They actually, wages come down because companies now have many choice employees to choose from to fill a position, right? And companies are eliminating positions, and the JOLTS will show you that as well. So fewer jobs out there, more people needing jobs, wages are going to collapse. You can say goodbye to that inflation or thinking you're going to get a 50% raise walking down the street. That era is dead and over. So that's kind of good for inflation. However, when those numbers come through and show what we expected to see, Wall Street didn't necessarily turn bullish off of that big data point. Also, the FOMC tapering off how aggressive the rate hikes are. Again, both predictable numbers, inflation, FOMC, and still Wall Street didn't like it, right? They didn't hate it, but they didn't really go, you know, all ham bullish off of that. And again, because Wall Street prices things in, or people price things in before it happens. And you can see that back when the same time in October, when I made that thesis, remember I made that post in October, Wall Street also gets in before those events happen. So it's so crazy that you guys can learn how to do this too. I mean, when I say, you know, when you're learning anything, the goal is, and I like to pin tweets just so I can actually just be like, look, this is when I said, and I remember each time we have the market cycles, I'll pin a tweet, and that's why you guys will know that's different about like my Twitter. I don't do call outs. I don't hold your hand and send you through trades. I build a thesis and said we're bottom for 2022 as early as October, right? And so what happens there, you know, in an environment like that? Why am I saying stuff like that? And what am I looking to see? What am I looking to get out of, or what am I looking to see out of the market right after I say that? And so while we did get those great data points, and Wall Street again comes in and starts back in October, remember when I said we're bottoming for the year, right? Other smart Wall Street institutional traders saw the same thing and got in betting on the same thing. But again, as the market unfolds, the response comes out, and you can witness that moment where 2 weeks ago, we're saying that's the end likely of the bull market for the year. So the whole point is that you always want to try to be a step or two ahead for reasons of why the market's going to move. And as of this 2 Mondays ago, we're not breaking highs. And then you have to say, okay, well, where's the next? And again, this is just my opinion, so don't formulate your trades out of this. But when's the next catalyst that's going to come out, right? Clearly, slower rate hikes. Okay, well, Wall Street reacted a certain way, and it wasn't really bullish. It was a massive run up that eventually traded out. So essentially, it was already priced in. This is what I want to tell you. Anytime, or actually, rate hikes. FOMC was here. This was inflation. So when you get these, wait, was it? I'm trying to remember which day it was. No, not here. It was, oh, sorry. Here was the inflation. Here's FOMC. And so what happens is anytime the market moves really rapidly off of an event and comes back, it's priced in. So we've already priced in the inflation. We've already priced in the FOMC. So it tells you that other people had a thesis like I did back in October. Other people traded back in October, and other people use this event to exit their longs. And the market's very illiquid now, so there is no real mechanism for the market to turn around and be bullish anymore. And that's the thing we talked about last week. The only catalyst that can come up that I can see would be beats on earnings coming up next year, right? So you have to think about it. All right, now we have a thesis is that the market's in what I like to call free fall. Not just free fall selling, but the market has no resistance at this point anywhere. Pure sentiment's going to rear its ugly head, and tomorrow afternoon is when you roll into a new VIX futures contract. But we always do the third Tuesday of the month, which is preceding VIX monthly options. You will see tomorrow morning, Wednesday morning, once the VIX contango for that close of those monthly options, right, is the third Wednesday of the morning, or third Wednesday of the month in the morning. VIX monthly options close the very trading day after that. That Wednesday is where you're going to see the market's purest expectation of volatility for January, which the only thing coming up is going to be what our walk up into earnings. That's it. There's nothing else that I can see that's going to come out that's going to change the direction of the market except for next earnings season. There are no more big catalysts. Okay. So people are going to, I wouldn't bet personally on the market collapsing from here just yet. Not off of this. I personally, on a bear stance I would take would be to be bearish off of something. Just like bearish off of that and off of that. So that's what I'm looking for to go into the next week. You guys, what do y'all think about the thesis in that the market, while on the monthly scale, is still showing bullishness on positive gamma on monthlies? There is no actionable buy the dip trades that I can see. And that's the next question, Pratish. I love that you said that. As I just showed you in a big circle, how our thesis in October, right? Remember, I made some trades way back then. We talked all about them, had some good runs, and now that bullish steam is kind of over for the year. And you can see that Wall Street had kind of already started using those highs to get out because it was already priced in. So the next question is, are these bad earnings already priced in? Is this selling right now, people pricing in that expectation of earnings. And you could exactly be correct. Right? Yeah, feel free to like and share the stream. I love you guys. Whew. Yeah, so that is the question, right? So let's look at S&P resilience and let's look at QQQ. QQQ is a bear short up, and we are broken through hedge pressure on the downside. I'm gonna pull up my little rocket scooter cheat sheet here, and bear short up is showing me that if you break through monthly hedge, it likely falls to the next resistance. So the next resistance, what I do is I go through here, I use my walls widget. Oops, I typed. Let me, how about I type in the right letters here? Let's go to monthly. And we're gonna look for some supports. At the 271 area. It looks like 260 is the bottom of the bull side on QQQ. So you look for the lowest wall in monthly mode, 260. On a monthly hedge pressure break, 260 could be the lower target on a big sell-off day today, if there is one, or over the course of the month. So if it continue to trade down, you always find the lowest wall in the zone on monthly scale. So we're going to zoom all the way out to the next third Friday of the month. 260 is it. So the R&R is really bad here to be long, in my opinion, for me. So I'm not doing a damn thing here today. Right? Losing 272, there is no support, period. You have on the weeklies, all bear positions, and no support even today. Nowhere are you seeing any call walls anywhere. And then, of course, on the monthly scale, 260. So today is a day that in this environment, that's a non-volatile environment. There's a way I like to trade in a there's a secret. There's a way I like to trade in a non-volatile environment, especially when you have hedge pressure breaks to the downside. I'm not trying to short the market. Instead, what I like to do is I like to bet that the market doesn't go bullish. It's a much easier trade to take. And theta works in your favor. On hedge pressure breaks to the downside, instead of shorting the market directionally, like trying to chase futures or chase a short or buy puts here, instead I can sell calls in the bull zone, especially expiring 0-day calls today, to bet that we don't spontaneously break into the bull zone. We had two great news reports last week, right? All these lovely things that you normally would expect market to be very bullish on. So without that speed, let's say it like that, off of inflation coming down, FOMC tapering off on their rate hikes, there's no catalyst this week that's comparable that could create that volatility. So if I were trading in this type of environment, seeing that the market is looking really illiquid, dealers are short, good news couldn't turn the market around, then instead of betting that the market is bearish, since it's hard to see how Wall Street's gonna lock in profits for the end of the year, I wouldn't bet on that direction. Instead, I would just bet that it isn't bullish. So not bull, which means I sell in the bull zone. And the distance here, this is the trick too, this is a 1 point distance. I would sell at least 1 point here or higher on the call side to bet that it expires worthless today. And an example or ways I would trade in this environment. Okay, what do I do now? So normally when we say when you break monthly hedge pressure, market's irrational, so no day trades. Like don't try to long or short this on like, let me buy puts, let me buy calls. Like the way we teach is that when you flip from positive to negative gamma or vice versa, especially on monthlies, but also on weeklies as well, the market is irrational and unpredictable. So while the market's irrational and unpredictable, I can just not try to bet on up direction, down direction. I can bet on not up direction, right? Do we all understand that? Can everyone type yes in chat if you understand what I mean by not bull and not bear versus bull and bear. If I'm bear, I'm going to buy a put. If I'm bull, I'm going to buy a call. If I'm not bull, doesn't necessarily mean I'm bear, right? If I'm not bull, I can just bet that we're not bullish. And so I could sell calls on the plus side. So what a lot of people would do right now in this environment, a great setup, and again, not trading advice, but as an example for educational purposes, a great setup is I would long by buying calls right above monthly. So in case we break through, I am long the market, and sell calls this distance in the bull zone to pay for that. So it's called a vertical credit spread. So if we do break out, then great, I'm long the market on high delta and I'm just losing on low delta. And I can always close those calls out. If I buy calls for like 2 weeks out and I'm selling calls in the bull zone to pay for them, then the minute the market breaks out and rallies, boom, I'm in the trade. Awesome. The market doesn't break out and rally, then I just win the credit of what I established. So if I sold $200 worth of options and bought $100 worth of options, then I made $100 if those options expire worthless. So credit spreads are the way to go in these kind of environments. Why 2 weeks out? So monthly map retired. It's a new thing that we're about to put out. In our next release in the next couple of weeks is going to be a function called monthly map. And what monthly map is going to do is it's going to let you pattern out what the stock market looks like a month out based on our risk algorithm. So there's nothing like this. The world's first options expiration planner for day traders. How do you pick what date, right? That's the biggest question options traders have always had. How do you pick what date? We have the world's first tool that lets you plan your dates. And I'll show you in just a second manually how we do it. And so you can plan based on, I was saying 2 weeks out based on me doing this last week. So actually let's do it right now and see what it looks like. So everyone knows the next earnings will be bad. Don't you think it's already priced in? Yes. Would you think it's reasonable to take shorts today? I can't give you trading advice, my friend, but I will tell you, as I just was speaking without reading chat, taking shorts today, instead of taking shorts, personally, when markets go across hedge pressure, it creates a gamma squeeze. Now, anytime you touch hedge pressure, there's a volume spike. If you guys have heard what anybody's been talking about lately, Rocket Scooter is a brand new algorithmic platform that completely throws technical analysis out the window and instead predicts high volume at levels based on market maker hedging and positional risk. It's a brand new style of analysis, and we're the first in the world to bring this to the retail side. So the thing is that I know when you hit this yellow line, there's a volume spike. It is every single time. It doesn't mean that it predicts anything at all. It tells me the battle is here, right? And when that volume starts to decline and fizzle out, whatever side you're on typically is the winner of the battle. So once that volume has a couple of waves out and is dying down and we're on this side of monthly hedge pressure, then the battle is lost in that way. So an example is if I'm long the market and we're falling lower on declining volume. So the trick of trading is when the market is moving off of a resistance with volume declining, that's where it's made its decision. Not with volume increasing. Volume increasing is just a large ramp up or wave of hedging, right? People are neutralizing risk positions or something right here, especially. This is market maker hedging. So as that volume is declining, there is no proof of any volume anywhere else, not in our style. There's not going to be any volume spikes that I can predict anywhere with our style. So why would I expect the market to randomly turn around? Well, random buyers have to step in, so unpredictable buyers. So therefore, I don't make a directional bet from here. When you break through monthly hedge pressure, and you've got no evidence, right? 260, especially on Qs, is the lower low I can see. The market could fall really far today. I don't want to touch it at all. So instead of betting that the market moves in a direction, to repeat what I said earlier, I can bet that it doesn't do something much easier today in this environment than that does something. I can bet that the market doesn't rally spontaneously for no reason. It's a really solid bet. I mean, it's some big news events last week and the market didn't rally either. So I personally wouldn't see this and go, ooh, let me short it, right? I see this and say, okay, well, I definitely don't want to be long, because if I was long the market, I would have stopped out. Well, don't want a long is the same thing as selling a call, not bull. So if I'm bull and I would stop, it's the same thing as selling a call. Do we all understand that? That's the same mentality. If I bought the dip and I stopped, then I'm not bull. Well, if I sell 280 calls, I'm also not bull. So it's not bearish, it's just not bull. So you have to think of it the opposite. If I would stop out of a position that I was on or in, then that position, if I bought puts and I would stop out, what it really means is I would be in the mode to sell puts instead. If I had bought calls and stopped out, I'd be in the mode to sell calls. So the idea is a much safer trade than a directional bet when markets are unpredictable and irrational is credit spreads. It's a very, very, very fixed risk trade. You sell a call and you buy a call, whether it's a credit or debit, that's up to you. But there's fixed risk on that trade. Fixed risk. The debit or the credit, it's fixed, right? So if you bought a call and that call goes in the money, you're going to make a certain amount and you're going to lose a certain amount based on the other call that you sold, right? And you can always sell that closed leg or that short leg of the trade so it doesn't go in the money. So figuring out dates is an art form, right? Okay, so Matt, after you've done explaining the invalidation of your thesis via COT, you can also explain why historically the largest declines in S&P come after the Fed pivot, which is contrarian most lately. Okay, so don't think of the FOMC as making the decision for traders. This is one thing I always make sure I hammer home, right? And everybody here, do me a favor, click that like button super fast. I'm about to drop a really good knowledge bomb. The efficient market hypothesis states that all available information is always priced in. Don't think that the behavior post-Fed is contrarian. Think of me in October saying, "Oh, market's going to rally until dealers are negative." And the dealers were negative, and I predicted 2 good news, did it not? Okay, so everybody really quick. Didn't we predict 2 good reports? We said inflation's going to come down 2 weeks before it came out. We said unemployment's going to go up, right? So inflation's going to come down. And then we said FOMC 50 basis points. We said that for a month, right? And we traded it. I traded it long. I don't know how you guys traded. I traded it long. And if I know the end is coming 2 weeks ago, which we did, we also said the end is coming, right? Then wouldn't I use the high of that predicted good news to exit my long at the top just for blocking in profit? Is your answer, Matt? It's not a contrarian viewpoint to the FOMC. It's people seeing what I saw and exiting their longs at the top. And didn't we all see that? Think about it like that. It's not people being bearish or contrarian. It's people being not bullish anymore. Not bull. It's not people being bearish. Do we everyone understand the difference? That's exactly what you saw. No debate there. Does everybody understand? So pretend that they're pretend they're rocket scooter folks, right? Pretend they're rocket scooter folks. And they understood all the positional risks. They understood... Where's my doomsday here? Right? And pretend they're like you, right? And they're smart. And then pretend in October they're like you and they're like me and they made a tweet and they pinned it up. And in that tweet they go, actually, let me make one more post here. Okay, do you guys like what I'm explaining? I'm about to do monthly maps as well. Okay, let's do a monthly map. Okay, so that's I want y'all to see markets like that. It is not people changing their minds about shorting when they were long. It's longs walk into the sideline and lock in that little bit of profit they got since October. Okay, let's do a monthly map. Okay, everybody else here understand that? Okay, so it's back in October, right? When you're sitting here and you say, okay, market's bottom for the year. That's great. And then all of a sudden dealers are back to negative and you go, ooh, and market's illiquid. It's not going to have an easy time rallying. And that was that tweet I made, right? And so as I know that back here, pretend I'm a massive hedge fund, right? And market pops on good news, I'll leak a little bit. Market pops on good news, I'll leak a little bit. Market pops a little news, I leak all of it. So, or leak, sorry, like close, not leak. Close it, right? So that's what you saw. You saw people predicting the good news, people seeing the market pivot, those two things that we all did. We all did that here, didn't we, Matt? Everyone here, didn't we all do that here? We literally called this market pivot by pivot on these streams. So imagine that we were holding $100 million in assets, right? And we knew that FOMC was going to be 50 bits. We knew that inflation numbers are going to come down. And every time it popped, it just sold a little bit, right, of the fund, and popped again, sold it. Now I'm out, right? Now I've made that profit for the year. Wow, we planned that trade, made that trade, and the fund made X amount of dollars. Let's lock it in for the year. That way we can tell our clients we made X% this year in a bear market, and we made some money. Thank God. It's not just to be long or short and predict the market. It's to show off against other funds and firms on Wall Street. Yo, bro, how much did you make this year? Oh, we're down 5%. What about you? Oh, we're up 9%. Wait, what? How'd you make 9%? Well, we pieced together this amazing trade and locked it in, right? That lock it in, so we can say we made money for the year. You know, when firms are reporting their quarterlies, right, or reporting their clients, you can brag quarter to quarter, year to year. That's very important, right? So you likely saw the good news experience profit taking, and now there's just no mechanic for people to go long again, and that's what you're seeing. So there's no mechanic. As a matter of fact, as early as the beginning of December, as we reported 2 weeks ago, the market was selling off, right? As we saw this was stopping and coming down, we go, there's a wave of selling, and there's no short covering. Shorts are in for the long haul for the recession. You can see that very clearly. And once the dealers went negative at the end of November around Thanksgiving, we started saying, uh-oh, market's done rallying. And look, you got higher highs. Of course, if you knew market's done rallying, higher highs, you're going to liquidate. And that's exactly what you saw. And that's how, when you're trading, you always want to have a thesis that's 2 or 3 steps ahead. Big bullish catalyst and pivot the market. Well, there is no bull catalyst anymore coming out, right? There's really nothing that can come out. So all we have to do is trade the risk that Wall Street puts in front of our faces, and that's what we're gonna do. Let's do a monthly map. You guys ready? Monthly maps are exciting, very exciting. Let's do SPY. 1 second. All right, guys, give me 5 minutes and be chatting on the Good Morning Fence podcast. Hold on.
Attracted to the things that'll bring you trauma. Overseas, yeah, we trying to stop the terrorism, but we still got terrorists here living in the USA, the big CIA, the Bloods and the Crips and the KKK. But if you only have love for your own race, then you only leave space to discriminate, and to discriminate only generates hate. And when you hate, then you're bound to get irate. Man, this is what you demonstrate, and that's exactly how anger works and operates. When you gotta have love just to set it straight, to control of your mind and meditate, but you still gravitate to the love, y'all. To the love, y'all.
You guys ready to do a monthly map? All right, let's go. I'll make a post. I'll tweet a thing in a little bit. I'm going to do what I call a monthly map. So what I do is I map out the risk for the month, and I'll show where positions are spread out between now and the end of the month. So I'll do it for SPY, and I'll do it for QQQ, and I'll tweet it if you guys just check my Twitter probably in the next 30 minutes. And it'll show how that risk moves throughout the month, and we'll see if it's going to sustainably be bearish or not. So I'll chime in a little bit. All right, let's do this. You guys ready? Yeah, so Matt, I agree, right? It's like you always have to think of the move you see now as like any directional move you see when there's no catalyst, right? Is always pricing something in, and you're 100% right. People are selling because they're expecting bad margins. Again, when we had that narrative a month ago, you can see Wall Street's always moving ahead of it, which is great. And that's how market makers work. You're trying to price things in before it happens. Yeah. So BSU on SPY. Let's pull the rockets. Okay, you guys ready to do a monthly map? Let's go. Oops. Let's go here. BSU is monthly hedge pressure interaction to hedge pressure. This trade I like to take on BSUs. Any breakouts of hedge pressure, I definitely like to long. So lowest call wall in the zone is another one that you'll see sometimes, which is this guy right here. This is actually pretty neat. It's actually taking place right now. The lowest call wall in the zone, which is here. There's usually a pivot there that goes to the middle of hedge pressure to that call zone, which is 385, the 382, the 383.5 in the middle. Isn't that cool? Literally that trade right here. It's an interesting mechanic where that short hedging meets those long positions, and the middle is where it's very liquid. I love these BSUs, as a matter of fact. So I don't normally trade them unless markets are very rational and I have a reason to. But this mechanic you usually see a lot. Isn't that pretty cool, right? So the middle of hedge pressure and the lowest zone. Hedge pressure, lowest zone. Right in the middle. Pretty cool. That balancing act happens a lot. That's why that is here on the BSU. UVXY is collapsing today. Market's likely just equalizing for the rollover, which is tomorrow. Tomorrow, you're seeing a lot of exercising today because VIX monthly options expire Wednesday morning. So tomorrow night, our night in the future session is the session, quote unquote, that VIX options expire, right? Because that's Wednesday morning around the world. So volatility, or the world is reflecting our volatility expectations Tuesday night. So today you're going to see UVXY move around just as people are getting in and getting out, exercising before that expires, right? Monthlies are always a big deal. Okay, let's do a monthly map. Okay. Yeah, and it collapsing is good. Remember, we're going to have a new VIX contract, so you have to see what the contango is when it loads up. Okay, so monthly maps are pretty cool. Let's go ahead and do this. And do this. You guys are going to love this technique. And make sure go to rocketscooter.com and check out the free trial. We have a 7-day free trial of our tools. We are growing so fast. We're glad to share these new style techniques with you guys. 100%. This is like making me feel super excited every day to have something new to show you guys. And new tools and new techniques for risk management are something I always want to have as a trader. So what I'm gonna do is I'm gonna put the classic app on just to save a little real estate on the screen. And let's run SPY. In a monthly map, pretty soon you'll be able to click one button and then that's it. Okay. So what I'm going to do on SPY is, okay, let me make sure I put in. Now with SPY is interesting because we do have weekly options, right? Every single day. So let's just do the Fridays really quick so I can show you kind of what it does. So what you do is you type in single date and then pick any date that you want. And we're going to connect the dots. So let's say for an example, what does this Friday look like? Let's look at the 23rd, right? So I'm going to pick the 23rd single date and I'm just going to map out the 23rd. So what we look for is a split between the call side and the put side. And this is a massive 355 to 420 is huge. I'm talking huge volatility. The distance between here is the expected range for the week. That's one of the neat caveats of monthly mapping. So if I go back to the 23rd, which is going to be right here, and I just draw those boxes, 420 is huge, okay? I'm talking huge. I'm just going to put a box there. And let's just make it like a dark gray. Okay. Oh, see that? 355. Okay. So what I'm doing right here is I'm showing where that risk is split, where bears and bulls are. And this is wide. This is very wide. So it's very high volatility expected. Okay. This week. That's not good. That's not good at all. Let's flip to the next Friday. We have 440. Oh, no. 370 and 350. So after this week, so this is the end of the year mechanics. You can see that it tightens up going into the end of the year. So I'm going to go to the 30th, and I'm just drawing these boxes right next to it. And when we actually do this on monthly map, we'll actually just be click one button. Actually, it's going to draw this for you, and it's going to show you how to analyze it. It's very cool. 370. Okay. One more. Jan 6. 384 to 355. All right, everybody, remember, rocketsuiter.com and do the free trial. Grab this and you can play with this yourself. It's a really cool technique. If you have not signed up for it, go here and check it out. Okay. Just mapping out a couple of weeks. Let's go to the 13th. 380 and 360, and there's actually two different risk zones. So let's just talk about the 380 and 360 one, because that's where we're trading right now. So what I'm doing is I'm making my best attempt at trying to predict the future as best as I can. So when you're trying to pick times or expirations on options, your goal is to try to predict the future. And that's what you're betting on. You're not betting that the market goes up or goes down. You're trying to predict the future, as in where it goes, when it gets there, and how it gets there. All of those are important when you're trading options. When you're trading stock, you can just buy or sell and then let it ride, right? And trading stock is a lot easier than trading options because there's fewer mechanics, right? With an option, it's not just, I bet that the market goes up, I bet that the market goes down. It's, I bet that the market goes up by this time, and in this mechanic, the market either chops there and then rallies up, or it slowly rallies up, or it dips and rallies up, or it goes nowhere. There's a million ways it can get there. In trading options, you have to kind of try to guess how it's going to get there. That's what's hard about options. Is you're trying to predict direction, timing, and what I call tortuousness, which is how hard it is to get there. How twisted of a path does it take to get there? And tortuous, we call that in physics. How many obstacles are in the way, whatever. So as we see, just mapping it out, there are already some obstacles in the way. We have a volatile week, which is very, very, very strange. And I'm just going to kind of like, and this is what monthly maps are going to do. You guys are seeing it before. It's going to be released And almost, I would say about a 2-week sprint is all it's going to take to probably graphically do this. Okay. So in this week, this price this week by this Friday is neither bullish nor bearish. It's in the middle. It's in a very volatile, illiquid period. This risk is reflecting exactly what we said we would see 2 weeks ago, right? Bull market, not necessarily super bullish anymore. You were inside of an expected range, just very wide going into Christmas. Not good for directional movement. When week over week, this distance gets smaller from here to here, the volatility will collapse from here to here, and it's relatively mild into the new year. When volatility is expected to be high, that's when the sell side of options is very advantageous. Because as volatility collapses, you make that in your premium when you sell your option. Do we all understand that so far? So everyone in chat, we're going to do a quickie lesson on monthly maps. Everybody understand that so far? So when you are very wide, advantageously, the time that IV is collapsing very rapidly from here to here, this week, which means this expiration, is the most advantageous to sell at. And that's where monthly map number one trick number one comes through. Is if I wanted to buy an option or sell an option, I'm going to choose how I want to trade based on these things I see. So if I see volatility relatively mild, you know, an expected week range of 200 points on the SPY, not that bad. But if I see a big wide range like this, it means that premiums are, when expected moves are high, premiums start to bake in a higher price. And then they start to lose that as the volatility falls away. So if I were to sell anything, I would want to sell for this expiration because I'm already going to get IV working in my favor. When volatility goes up, like in this week, you're going to lose, or you're going to artificially build in premium just for the volatility going up. The price went nowhere and the volatility went up, your options would go up slightly in value. So when I want to buy on an expiration where the expected range is getting bigger. So even planning timing, if I were to buy 2 weeks out, like somebody had said, why did you pick 2 weeks out? And why would I sell this week to pay for that week is exactly why. I'm taking all the Greeks and trying to stack them all up in my favor. So trick number one is when you have the week where volatility is getting smaller, so this is getting smaller, I want to sell into that expiration. And the week where volatility is getting bigger, I want to buy for that expiration, but from here on this date. Because I don't want to buy this expiration now because it's already got this high premium. I'm going to wait till here, and inside of here, buy some expiration in the future. So when you are losing volatility is when you want to buy for some point in the future and exit the sell side of the trade you're in, if that's the case, for the profit. So an example here is, what would I do? I want to buy at least 2 weeks out. and I want to sell for that expiration, just on volatility alone. So number two, which the second trick is, okay, I'm going to sell short term and buy longer term. On monthly map, you have visibility of up to 4 weeks out. Or sorry, up to the next monthly expiration. That's how you look. You don't look any further than that monthly expiration. This is the strongest day you can have an analysis like this. So if the price was actually staying exactly here and went nowhere, it's not bullish or not bearish here, but here it is bullish. Here it's almost bullish, and here it's bullish. So if we went absolutely nowhere for 3 weeks, we would maintain trajectory on the bull side. Still, it'd be barely bullish. You see that? And watch Tesla, because Tesla itself, talking about that on the podcast today. Watch if Tesla's reacting to Elon's tweet yesterday about stepping down from Twitter. Okay. Does everybody so far see how this works? I'm going to basically draw a straight line, and whatever the price does today, I can map out what my options trade looks like in the future. An example, let's say that I bought 400 calls for like next January, right? And we trade to like 380 and 377. And let me just see if, like, say on this date, we're by Friday, say that we trade like right here on Friday. And I say, do I still want to hold my calls or not? Well, from here, I can look into the future and say, well, I'm somewhat bullish this Friday, but the next 2 expirations, I'm not bullish nor bearish. So anytime you're trading inside the middle, you're going to assume, or I assume, non-directional. So if I longed options and we're trading like down, and like, say for instance, we trade to here by this Friday, I'm going to look into the future if that's the map, and the map will modify every day. So I'm going to modify it. But if that's what I had, I would look at this and say, oh my gosh, in 2 weeks, I'm not bullish. And in 3 weeks, I'm still not bullish. I don't have any bull positions to support my bull trade. Let me close that out. So that's how you can use this to invalidate a position. Now, if we traded higher and higher and higher right here by this week, while it's neither bullish nor bearish this week, it is clearly bullish, bullish, bullish for these 3 expirations. So I can actually tell myself, okay, my bull trade is looking pretty okay. Does that make sense? So pure bearishness is 360 this week, 355. I mean, we're very far from the bear side, which is great. As you guys see, monthly hedge pressure as well at 370 is actually pretty low. So I'm going to draw that here. So all this information is here. While it does look pretty bad, it's not going to likely crash. Before the end of the year. Would I go long here? For a day trade, there to there is a trade setup, yes, but it already took place. So the minute that it goes from here to here once, I take that scalp and I end. I don't hold to bet on a breakout. So that first hit on low call wall to the middle that we saw on Rocket Scooter, right? That trade already happened. So I personally I won't take that trade again a second time. Second question is resilience greater than 0? No. So I'm not expecting half gap to go and be broken that easily. So right now, nothing looks good from here to here on an R to R basis. Absolutely, I would not personally. But once one of those legs happens one time, I don't bet on it happening again. Doesn't mean it's not a terrible idea. Every trade you can do risk and reward. If you wanted to long somewhere, you just have to tell yourself, where do I want to long to and where would I want to stop? I personally don't see any signs of half gap being support and going. Not yet. But if I did want to buy there and you wanted to buy there because you asked me would I do it, if you did it, just always make sure you know where your risk is on the reward you're trying to get. So even if I did gamble at 382 on the long side, I need to make sure I'm out somewhere where I need to be out. And personally, one strike below the bull zone, I'm always out on the long side. So my next step is predicting where I think it'll go. From here, I don't think it'll break this and go. I think from here, it's more likely to go down. So I personally, if I were to luckily make that scalp, I wouldn't try it again personally myself. It's up to you how you want to trade. Doesn't mean it can't rally for the day or it has to do anything. But anything you do, always set up your risk and reward every time. I personally don't see good reward to risk. I said that on the podcast this morning. The market has very little upside for potentially very long downside today. So I'm not super excited to do much. So a monthly map like today, right? Into this Friday with no catalyst, even 420 calls, right? I mean, way out of the range. Likely to expire worthless by Friday. 350 puts likely to expire worthless by Friday. So people that are selling or trading iron condors, for instance, you want to do those legs. How far out on the sell side is do I want to go? So if I look a month from here, again, this is how you can do this. I'm going to take the current price now and just draw like so when you draw a line through here, it's not bullish, bullish, not bullish, bullish. It's not bearish, which is good. That's great to see. And you have monthly hedge pressure, which also has positive gamma. So it's not dead yet, but it's just not really alive. Do we got it? So the way I would trade this now is actually as in 2 weeks, I can expect that it's a likely dip to there. And then there's support because there's bull side here. So what I know is that between now here and 2 weeks from now, I'd like to be long on the long side so I can sell calls to buy the calls from that. So for example, here, while IV is high, why don't I sell way out of bounds? And actually, let's go deeper into the monthly map and put in the rest of the dates, right? Because we have SPY weekly options expiring all week. Let's do let's just do Monday, Wednesday, Friday. I don't do all of them, but just enough. This will be Wednesday on the 21st. It's such a cool thing to do this. I love this new technique. OneDrive, look at your memories. Oh, I need to turn off those notifications. So OneDrive shows you something that I don't want y'all to see. Probably a couple weeks. We're having a meeting today to talk about it. So as you see this week right here, bear side this week, right? So if we stay where we are, it's bearish, not bearish, bullish. So the market's expected to have some downside for 2 weeks. Easy to see that. But that stabilizes 3 weeks out. And that's how monthly maps work. So this week, for example, if I were to use Wednesday, if I went to sell Wednesday calls, everybody tell me just by monthly map, if you were going to sell Wednesday expiring calls, where would you sell? At what strike? Just see if you guys. Take a stab. If I wanted to sell a credit spread, right, and I wanted to sell a call to buy a call, if I'm not bullish, then I need to find the bull side and then sell on the bull side. So anything above 400. Y'all got it? Yeah. So today, if the market rallies to here, or any upside between now and Wednesday that goes towards here, the higher the premium, the more likely I'm to sell at 400. And where's the best collapse of that premium for me is what expiration is, where I told you guys the first trick was this biggest decline in volatility is that expiration. So because this is the risk and move today, this is the highest drop in IV. So this expiration is what I would sell 400s for. So today, if the market moves to there this week and comes down, when it hits here, I would likely want to sell 400s for this expiration when it's up here. And then I also want to be long the market anytime we're on the bull side to whatever expiration or whatever target I want to pick. So whatever the case may be. Yeah, so I personally this week over 2 weeks, you can see the market dip to here and hold. Anytime you're trading in between these things, this distance, I like to sell outside of that distance and outside of that distance. Anytime you're mean reverting, selling is very important because the market's volatile, non-directional, which is great. So you can just basically tailor it any way that you want. But for today, you can see that the market does have that BSU. So the first thing I do, and monthly map will just kind of draw it like this with some more information. So ideally, the way that we want to do it is that you can input some information and it will analyze your trade for you in the platform. Like for instance, if I say I bought 400 calls for a month out, then it would tell me, okay, when are those calls worth something and when are those calls not worth something? So and maybe I can have like and we're going to meet today to talk about the graphics of something. The graphics of all of this. So I can maybe have like a bar or something at the top that would display like what I wanted to see. We're kind of discussing how we would present this information today. It'll say, I'm expecting if I'm long the market, then I want to see bullish support. The bullish support kicks in right here. So I got 2 weeks of probably theta decay, right? And it would be displayed somewhat like that, right? And it could say like, you would say like an example, you could say like input your trade, right? And you go, I would say like, I'm gonna long call 400, short call, I don't know, 420, right? Like I would say that. Oh yeah. Say like I can go in on the trade planner. I would say long like that, right? And it would say right here, trade 1, theta decay. And then it'll be like basically flags, like warnings. Theta decay. It'll like tell you like instruction, like I can experience a lot of theta decay because you're out of the money. And also premium decay from IV for trade 1. And so you can, it'll essentially, you can tell it what you want to do and it would likely give you some information based on the trade you're doing it, right? Something like that. or even not even warnings, but like alerts, theta decay favorable. Because in the money, premium decay, minimize. So you'll know like areas of interest where your options will be strong and not strong. So monthly map, essentially you would like input your trade and it would tell you what's going on with each one of them. Something like that. Say you picked, I want to long this call, and I didn't actually have to type in the expiration here. Long call 400 for, let's just say that I picked 1-3 expiration, right? And that's basically what we're making, or 1-6, right? So that's the whole idea of like a monthly map, is so you can actually sit there and say like an example, like this is, by the way, not a trade. I have to make sure I like input example, not real trade. Okay, so just remember this is an example, it's not real. I'm not really trading this. I just made up two numbers just to draw what it would look like. So this is not, if you're just tuning in, this is not a trade idea. This is just making up two numbers to show how you would show it. So if I long to call 400 for 1-6 expiration, it would tell me that there's a warning. I'm going to decay theta very rapidly because it's going to be very hard for this to be bullish until this week, where the theta decay is a little more favorable because you're more likely to move higher. And like whatever I'm going to say is like, you know, favorable, not in the money, but like bull side. I kind of said that the wrong way. Out of the money, not bull side. Basically like that. And maybe not even favorable, but like better, right? Bull side. And then it'd be like that, essentially. Something like that. Delta, out of the money, premium decay, out of the money, right? Just whatever the case may be, right? It just will let you know things. I'm just making up numbers here. For each side of the trade. So clearly you'd like to see something that's green and green. Some display. Sure. So like the other one, shorting a call 420. It's great. Right? It's great for 2 weeks. And then the warning comes 2 weeks later, where it's like, you can say shorting a call. Well, it's not bull. So you're clearly not bull for 2 weeks. That's great. That'd be like a good sign, right? Oops. And I love Peter. He's so fun. He's so funny too. Peter Tuchman on the podcast we're on. Hilarious dude. Great information. Alerts. Not bullish. That's great, right? Like data in your favor. Like things like, I'm just thinking out loud, like not bullish, and out of the money. Premium decay in your favor, right? IV increasing. Or actually, sorry, collapsing. Like whatever the case may be, right? And then you have like maybe like a caution here, like maybe yellow, I don't know. And that's it. Something like this. Option. All right, market. Nice. On bull side. Like a warning, right? Or like cautions. Something like that, right? And just basically just prints out, like you tell it what you want to do and it'll tell you, like, I picked this credit spread and it's going to say, well, price is now on the bull side and you're short a call starting here. Careful, right? Alerts. Well, great. Theta decay is in your favor. You're not bullish and you sold a call and you're out of the money. Great and great, right? Last and premium decay is in your favor. IV is collapsing over the course of this time. Or we can do a line item of each one of the Greeks that matter. That's another way to do it. So anyways, so for here, like if I were to be bullish the market and I wanted to be long-term bullish, remember when you are at the money is the highest theta decay you get. So we are at the money on the bull side. If we were at 380 and I bought 380 calls, I mean, it's going to decay very heavily bouncing around there. So in reality, there is no real clean bull trade from here as of this day. I don't see anything to buy even long term. Maybe a dip at 369 or 370 in the next 2 weeks is long to buy. I don't have to reanalyze this. But the market is very liquid inside of here. And it does look like the path is not bullish until at least 2 weeks from now. So ideally, I can map out the trade and it'll help me figure out expected theta decay for 8 days. Ooh, I like that as well. Yeah, yeah. Theta decay expected. High theta decay. Yeah, something like that, right? Okay. Oh, sorry. Okay. So my bad. I was chit-chatting here. So the next thing is that you would input either like time and it gives you an expiration, or input expiration and it gives you, sorry, it gives you, not, sorry, input time and it gives you a strike. Or input expiration. I'm sorry. And gives time. Last part. So the idea is, if you guys see what I'm doing right here, based on this lesson, you sold a call spread and you already made 250 bucks. Oh my gosh. Lori, killing it, girl. All right, nice. It's hard to wrap your head around how valuable this is. I know, it's like, ideally, what you want to do is if you have a multi-leg trade, right? Like a credit spread, then each one of them will show when it's like good, warning, or bad based on definitions we give it. And so like bad and good, good and warning. So the sweet spot is when it's good and good. It's favorable to what you're trying to design, right? So auto would be something you would check that would iterate both these things and this thing to maximize the sweet spot, right? So we'll cycle through all possibilities and find one that has the longest distance for sweet spot. So your input was, well, I want to buy 1/6x. So you have to isolate, obviously, to prevent infinite solutions, right? You have to isolate to create 1 degree of freedom. So we have, let's input a time. Like I'm looking at 1/6. What is the optimal strike that maximizes the sweet spot? Okay, well, let me type in a strike, and what's the optimal expiration that maximizes the sweet spot? Nice job. Yeah, good job, Larry. So the idea is this, that an auto mode would tell me if I'm one along 400 calls, then if I pick 113, that's the maximum sweet spot. If I want to sell 1/6 expiration, it might say, ooh, 410 is your maximum sweet spot, right? So the idea is that you can automate it telling you where Greeks are in your favor over time. And so ideally, auto mode, you can type something in, and auto mode will let you fiddle with some of these numbers and produce the most optimal trade for what you design. You want to do a vertical credit spread? Okay. I like right here, I definitely want to sell 420s because it's outside of the call zone and all of these things, and we're below it. What's the best expiration? And it would tell me what the best expiration is. Or if I want to pick a time, I need to hedge this thing for a month. Okay, well, I'm clearly aiming at that exact expiration. What's the best strikes? And then it would do that for you. That's the whole point. It's like solver on your charts, right? When you hear the word iterate, everyone's going, ooh. So it'll be complicated to get this information in a really nice way, without going super crazy. But the idea is basically that. So before, I took the picture, so let me delete that. So before I go in there and make a post, I'm going to remind myself when I drop this. This is fake data. So I don't come back and say, wait, is that my actual math? Okay. Fake data example, not real math trade. Okay, just so I can remember that. That's the point, right? Warnings. X. Short call Y. Yeah. And that would kind of be it. Like I would say, like sweet spot. So also with the idea is that when you get to your sweet spot, if your trade is losing money, or if you get to your sweet spot, then all the things should be favorable for your trade by your design. And you're able to plan like, okay, well, and I'm expecting it to not really take off for like 2 weeks, something like that. Well, the hard part will be getting this information displayed appropriately. So, yeah, that's a great idea, actually. Another idea is to scan for, scan for like one. Well, you'd have to anchor one of your points, right? So one like a type of trade, say like a vertical, debit, spread. 2 would be, and you would tell it like, I want a sweet spot for expiration. So this week. Therefore, 3, the return will be stocks in that sweet spot for those expirations. Yeah, for that type of trade. Well, you would have to tell it what expiration. You have to anchor one of them. So ideally is like, I can say, I want stocks to have a sweet spot of this time frame. So you'd have to tell it start time, end time, or that expiration. And then it would produce in the scanner stocks that match your design trade in that sweet spot. Yeah. I like that a lot, actually. All right, we're meeting in 15 minutes to talk about this. I'm gonna go ahead and prep for that. Love you guys. I'll talk to you later. Thanks for checking the Rocket Scooter, man. It's great to have you guys here. Go to rocketscooter.com. Check out the free trial. 7 days. Check it out. If you do sign up, it's half price off for life, the monthly subscription, as we're going to our first 1,000 members. You'll be able to lock in a half price, $100 a month, all your data feeds, all your tools, everything locked in forever. You get the full version of the platform. At some point, we'll itemize portions of the platform where you would buy specific tools. But those of you that get in right now will get like a $500 a month thing for $100. You literally will get the lion's share, and people will wish they had that if they like our platform and not have to pay all the fees for all the different things. So $100 a month is all it's ever going to be for you guys to sign up today. Once we hit our 1,000th member, that whole deal goes away, and we go back to, you know, resilience $20, maybe liquidity map $50, whatever you options data $30, you know, whatever the case may be. Itemizing that stuff. This is the full platform for easily priced $100 a month, cheaper than gym membership faux show. See you guys. Love you guys. We'll see y'all tomorrow. Have a good one. Don't forget, check out on my Twitter, the Trading Camp podcast, interviewing Wolf Financial. Great episode. I watched it last night. It was fantastic. There's a link on my Twitter. Check it out. We love those guys at Trading Camp. We love Wolf. And tomorrow morning, we'll be live for live trading spaces on Twitter, hosted by Wolf Financial, just for Rocket Scooters. So we will be front and center there. You guys come to the stream, but also we will be live in the space as well with a bunch of our friends. So come on in, check it out. Also grab that free trial, and we will see you guys tomorrow. Big announcements for our community coming this week. Trust me when I say the rocket's about to take off. Love you guys.